What is going on, everybody? Let's just jump straight into this. Right now we are looking at Bitcoin, and there's a lot to talk about per usual when it comes to Bitcoin and the crypto market in general. As you know, we are approaching an election, so a lot of what we're going to talk about here is related to the election. That is sort of the fundamental narrative right now. But Bitcoin is still in this range that we've been talking about now for like 7 months. So if we zoom out here, we can see that Bitcoin is still in this range that it has been consolidating in since about February, March. And this is a very interesting chart for many different ways. And I'm going to show you why I think this is an extremely bullish chart, but also explain a little bit about why it's doing what it's doing, which is it's just sitting here at its previous all-time high, consolidating and really shaking people out, getting rid of supply while people come in to buy. A lot of people have been thrown off this cycle or this year from Bitcoin because they expect it just to go straight up in a straight line, which if you look at Bitcoin, it doesn't do that. It actually has very, very long consolidations. In fact, this one is quite small compared to other ones. For example, you had this consolidation period right here. This was in 2019 that lasted, around 500 days, right? So this is something Bitcoin actually does quite often. It has very large consolidation periods, and then it has very explosive moves. This is very different, like I said, from something like the S&P 500, which has generally gone up in a straight line, with the exception of a few months from the bottom here in 2022. Now, there are reasons for this. The reason why, multiple reasons, but one of the reasons the stock market pretty much just goes in a straight line with, smaller pullbacks and consolidations is because you have passive flows that are coming in at all times, whether the market's doing well or not. People are investing in the stock market, and this has been one of the best ways people have beat inflation over the last couple of decades. So Bitcoin is in its adoption phase, where it's in the stage of getting those flows, where it will have more of sort of like just a grind up price action, and I think that comes probably next year. Or really for the remainder of the decade and beyond. I just don't think we're there yet because we're at the very beginning of the ETF being adopted. You have to realize this ETF was just launched this year. There really hasn't been time for these big investment firms to really understand it and learn about it. They're in the process of doing that, and some have. The hedge funds in particular, they're the ones that have been buying this ETF since the launch. Okay, but the big investment firms, they haven't really gotten in yet, and I would say that they're probably starting to buy now, or maybe they've been buying over the last 7 months, but it's going to be a slower process for them, and this is very, very early for Bitcoin. This is sort of like the beginning of Bitcoin as people will know it in the future. So that's why it doesn't really follow the same sort of price action as something like the S&P 500. The other reason is that the S&P 500 is a different asset class. Okay, the S&P 500 is composed of stocks, and these stocks have earnings, and they have different sort of risk variables that just don't really apply to Bitcoin. There's certain narratives that don't really apply to Bitcoin, and they are different asset classes. This is why Bitcoin is considered a commodity, because it's not like a tech stock. And I think it's appropriate to show you the chart of gold, because really when we look at Bitcoin, this is really what you should be comparing it to, because this is the closest asset class to Bitcoin. They have similar mechanisms or similar properties to it in terms of scarcity and things like that. And one of the things I think in particular that's very similar between gold and Bitcoin is its supply-demand dynamics. Now, they're not perfectly analogous because gold is actually inflationary. It has about a 2% roughly inflation rate per year because as the price goes up, people go and mine it. So it's averaging about 2% inflation, and Bitcoin's lower than that, and it'll be at zero once all of the coins are mined. But they are similar in the sense that gold has very long consolidations, much longer than Bitcoin. So if we look here in 2020, this was just in this giant consolidation range before you've had this breakout. Now, you may ask why. Well, these are very large, trading firms or really investors, okay? It's a better way to put it. that are just accumulating positions here because they're aware of really what the narrative is now. Okay, it was very clear, really, I would say as early as 2022 or 2023, that even though the Fed was going to raise interest rates, that it wasn't going to matter, and that the U.S. debt would increase. Well, why am I mentioning this? This is very, very, very important. Very important to understand why Bitcoin has a very bright, likely to be next few months, but probably really the next decade or so, is because of a few different factors. But namely, this is really the most important factor to consider when you're looking at gold and Bitcoin. And I think Paul Tudor Jones has explained it or said it in a very simple way. All the roads lead to inflation. So that's why he's long gold and Bitcoin and commodities. Why am I mentioning this? Okay, it's because that is really what's driving the price of gold right now. That is what's going to drive the price, or what's driving the price action currently of the stock market and Bitcoin. Assets in general are going to respond to this fact, this elephant in the room, that we have almost a $36 trillion debt in the United States. Why does that matter? Well, most people don't know this, but this debt has an interest payment, and at current numbers or current standing, it's about $1.1 trillion. Well, why is that significant? Well, because that is about 25% of what the United States earns revenue-wise from taxes. So 25% of what the United States earns goes straight to the existing debt. It doesn't take a a mathematician or a genius to understand that that's compounding. And the only way that you actually can deal with this now is you have to print money, because you're spending so much on the interest payment, and you have military, Medicaid, entitlements, right, that almost no politician will actually cut seriously because they won't get reelected. So what does that mean? It means you have to print more money. So this is really why all roads really lead to inflation, and not to mention that the only way that really people how do I say this? What the Fed says and what the Fed is doing are not the same thing. The same thing with the Treasury market. They know that inflation is the point. This may be controversial, but they actually need inflation, because the only way that you actually get out of this is you have to inflate it away, right? So if you have, let's say, if you have $100,000 in debt, but that debt is inflating at, I'm just going to create a number here, at 10%, well, your debt is going down in value. So you actually owe less, assuming that you're actually making more money, right? That's really what they're doing here, is they're going to keep inflation up on purpose. They would not want it to go to zero, because this becomes a much bigger problem if they're not inflating it away slowly. So that's really what's going on here. So it's important to really understand that all of the stories in between of, the Fed said this, or the SEC says this, or this data report says, it just doesn't matter. Whether or not, you go into a recession, it doesn't matter if you're in a recession, it doesn't matter if the SEC comes out and says they hate Bitcoin. It doesn't matter. In the United States, it's a legal product for people to invest in. It's already, it's cemented in terms of people's ability to get that ETF. That's not going to go away. It'd be unconstitutional. So Bitcoin can really only go up in this environment where you have $35 trillion of debt, and the political will to control it is basically zero. Again, that's not likely to change. At some point, this will all change. I'm a big believer that this is clearly just a short phase in the grand scheme of things in history. Okay, so why am I like mentioning all of this? Okay, because if you don't understand this price action will annoy you, and you'll likely get shaken out. When we look at Bitcoin, what we'll see is that it is annoying. It's very annoying. What it's doing is it's just ranging, getting everyone excited. Oh, we're going to go, we're going to the moon, 100K, blamp. Oh no, it's over. Well, this is when you get a lot of big buyers that are going to step in. Same thing. Oh, we're going to the moon, bump, it's over. And it's like watching a football game where you're winning and then you're losing and then you're winning, and it is driving people crazy, and they're emotionally damaged from this if they're trading this. So what DeFiancy is doing from our perspective is, this is what's going to hurt you, is thinking that you're going to trade this perfectly and trying to hit every move in here, when really what you should be doing is saying, how do I get the biggest position in a safe way where I have the right risk management strategy, trying to account for different possibilities and things that can happen, okay, on a distribution curve, meaning you have to be prepared for the worst, okay? But how do I get that position so that I can enjoy the bigger move that is inevitable, really, when you look at this, in that it's likely to follow gold? Okay, so I'm mentioning gold from a fundamental standpoint, but let me show you why I'm mentioning it outside of just it's fundamentally similar. Not only is it fundamentally similar, but it has very similar technicals, okay? And I think this is very, very important for people that are trading this right now or investing in this to understand is that you're really getting in this before it's likely to have a very massive move, comparable, I think, to gold, and here's why. So this is the gold chart here, okay? This is gold's chart. And I have to change the time frame because gold is moving a lot slower than Bitcoin. Well, why is that? Well, Bitcoin is sort of like exponential gold, meaning that it really is like just a faster asset. It's smaller, it has a smaller market cap. Gold has about a $10 trillion market cap and Bitcoin's a little over $1 trillion. So they're very different in that sense, okay? Now, they are, though, really doing the same thing on a different time frame. So if we look at gold had this very large run up here, okay, back in, from 2008 to 2011, roughly, 2012. And then it did this very long consolidation pullback, which is very, very similar how this is really the same thing. Bitcoin, very large run, okay? Just like this run, very large run. And then you have a big pullback, very big pullback here in gold. Well, this is where people get shaken out. And that's once it gets back to its all-time high, you have people who bought here. You have people for a variety of different reasons that are going to want to sell to you here because it's just in their best interest. So you're always going to get some sticky price action. This is what you saw with gold. And as you can see with gold, it took much longer to get through this process of shaking out people. But what ends up happening the longer you do this, the much more likely or the more explosive typically it is once it breaks out. Now, why is that the case? Supply and demand. It's very, very simple when you really look at this. The more you understand it, the more you understand how simple this actually is. It's not very complex. It's just supply and demand. If you have sellers selling at effectively the same price for Bitcoin, which is really like 60 to 70, the longer that they sell, the more sellers that are getting rid of their Bitcoin, the less sellers you're going to have as you go up. You got to realize there's a finite amount of Bitcoin. Okay, they're not being created out of thin air. So you have people buying these Bitcoins here. Well, who do you think these people are? Why would they be buying at 60 to 70K, okay, that they're averaging price in between there just to sell to you barely higher? No, they're not going to do that. All you're left with as you go up are people that have what's called strong hands, and you've shaken out the people who wanted to get rid of their Bitcoin. Okay, this is the same thing with gold. Okay, so this is why Bitcoin is a bubble asset in general, is that what it does is it just shakes people out in these violent ways. Typically, it's gotten less violent over time. And all you're left with is people who just don't want to sell to you until things are significantly higher. Okay? I can tell you that the people buying Bitcoin here are not going to sell to you until it's probably closer to 100K, if not higher than that. Now, you'll have sellers along the way, but you're not going to run into these big supply overhangs like you saw here until you're much higher. And another reason for that for Bitcoin is because after the halving, the miners who are really a big component of that supply factor, okay, they're going to sell to you. Why? Because their revenue has just been cut in half. And from an operational standpoint, it makes a lot of sense for them to sell to you. So that was a big portion of this, and we expect that. The prices do not do well after the halving. Never. Okay? So that was expected, but what made this a little bit more unique was that you had the US government, the German government, and the Mt. Gox distributions, which we've talked about in previous videos, that are contributing to this heavy supply. So the fact that Bitcoin didn't have a bigger pullback is honestly remarkable considering how much sellers there actually were. And these are sellers that are not normal sellers, okay? They're not sellers that are strategic, really. They're just getting rid of it because, well, they don't care about it. The US government, they just get it off my hands, right? German government, get it off my hands. And the Mt. Gox repayment's a little bit different, but when you give, I think it was about a huge amount, and just threw it to all of the people that were involved in that hack. This was like 10 years ago. I'm not going to go into that, but these people had been sitting on, waiting for this for like 10 years. Okay, so they probably want to sell something too. So what I'm trying to say is very heavy supply. Well, you've already gotten through most of that, if not all of it. Okay, practically speaking. And now what you're sitting at is a near, you're at the breakout zone, so to speak, pretty much where gold is right here, okay, on the right side of the screen. And people are just, they're over it. I mean, this is just like, people feel like they've been in World War II or something if they're a trader, because it's just, again, emotional roller coaster. But that is why most people don't do well with this. The only way you win with Bitcoin is patience and being able to have a proper risk management strategy. Again, DeFiancy doesn't care about all these movements in here. Although if it was in different conditions and I didn't think that there was, if we didn't think that there was a big move coming, then we would try to hit these moves and we would take what we can get. But when you have something that is so promising and is backed up by, again, maybe an immovable force in many ways, this is really what's going to drive the price, is that more money will be created, more liquidity, and the assets most sensitive to that are gold, Bitcoin, and the stock market. Okay, they're going to do very well. Now, that's sort of, I would say, the most important thing to understand is the debt. But I wanted to show you the technicals and why it's so similar to gold from a technical standpoint. So I'm saying all this to say, let me get back over to this one screen, is that Bitcoin looks really good here. And it can go all the way back down to 60 with no problem. I mean, I don't think it will do that. I actually think at this point, it will probably hold somewhere, and we're not going to get too much in the technicals here. I just want to keep this pretty abstract, but it'll probably, it could come back to, 58 even. It could come back to 62. This is just going to be irrelevant probably in just a few weeks when the chart's going to look like this probably. And I'm not trying to say this is guaranteed, but if I had to guess, given, again, this is such a bullish setup, given how long it's gone sideways and removed people, that once this thing breaks out, I mean, it's going to look pretty crazy. I think it's going to be very similar to the previous markets where this is just going to be irrelevant noise on the chart when you're up at, 150, or who knows where you will really be towards the end of this. I'm not sure, but I know it's not here. That's really my thesis at this point is it 100? Is it 80? Is it, 200? We'll see. Once prices go up, it increases the demand because people have animal spirits, as they call them. The prices going up actually increases the demand, and it creates a bubble. This will likely go back into a bubble state over the next few months. So, yeah, that's kind of, I think, the overview of really what I want to get across here is you got to be patient, and the election. So that's what I want to segue this into, is the election. So right now, Donald Trump has a pretty significant lead in the betting markets, about 62% roughly on Polymarket, which is the largest betting platform, and he's around 58 to 60 on pretty much all of the betting platforms, which is quite a bit higher than what you're seeing from the press. So depending on what your philosophy is, one of those is a lot more accurate than the other. I typically think that markets are going to be more efficient, more honest than a centralized group of people that may want people to believe something that may not be true. Or I just don't think the methods of how they poll are quite accurate. Although, again, some people will argue with me on that. I'm not an expert on polling. I just think markets are typically going to be smarter than that. So I do think that these numbers are pretty accurate. It is important to understand that the dynamic here with crypto, not particularly Bitcoin, but crypto, because the crypto market. So what is the crypto market? You may be wondering, because Bitcoin is not really the crypto market. Bitcoin is just an application of crypto. It is a commodity, an institutionally accepted thing that's not going away, regardless of who wins the election. If Kamala wins, Bitcoin's not going to go down much. It will initially, because people perceive that to be bearish, and markets are like that. There will be a de-risking event there, but it would likely just regain strength and just continue what it's doing. Why? Because of this. Again, it doesn't matter who the president is, this is going to keep going up. But the crypto market, on the other hand, that is a very, very different thing. And I could definitely make a case that most of the crypto market would be dramatically affected by a Kamala 1, considering that the current administration, which we can only speculate may be similar to, is not particularly friendly to many of these crypto startups, if you will, many of these tokens and stuff that we look at. So caution there. It does look like Trump is going to win. I'm not an expert on that, but that's what it seems like at the moment. But I think you will see a lot of hesitancy going into it, the fact that we don't know, and it is a risk vector for these altcoins, as we call it. But for Bitcoin, it's just not going to matter that much. So that's why I don't actually expect for it to really hedge much going into the election. If it were, if Trump were to win, that's what it wants. I mean, that's what Bitcoin, that's what Bitcoiners want, as they are a more pro-Bitcoin group of people, obviously, this Trump administration that would be coming in. But ultimately, it wouldn't really matter as much as people think, because it's already an institutionally accepted asset class. So I'm not really that concerned there. One of the opportunities that I want to talk about, and I'm going to talk about this in a stream. I guess you'll probably get this video after the stream. So hopefully you do see the stream that we're having later today, which is today's Wednesday. But I'll go ahead and go into this for a little bit here, which is there are a few altcoins that if Trump wins, that are going to be really, really good opportunities, and most of them are meme coins, and we're not going to cover that here. We'll cover that in the stream. There is a lot of enthusiasm and capital that has been flowing into those, but I want to talk about TIA because this has had a very large downtrend over the last few months, like 80% roughly. It is likely to be a significant player in this industry. And as you can see, it has a very large fully diluted value. Well, the reason I'm pointing that out is because they're going to have a huge, what they call token unlock, or coin unlock, meaning a lot of the supply is going to be dumped on the market. Well, we've known about this for a long time. So that's why TIA has had this 80% drawdown since like February, right? Interesting thing about this, in my opinion, is if you look at TIA, you can tell that there is just an incredible amount of hedging that has occurred. So if you look at this red graph here, this is the funding rate, meaning that there's so many shorts right now on TIA that you actually get paid too long. It actually costs you to short. It's usually the opposite. So if you look at Bitcoin, it will be like the opposite of this. But so basically there's an extreme amount of shorts that are, what they're doing is, people that are going to get some of that unlock, they want to secure some of that profit, so they go ahead and short. That's a way for them to actually kind of realize, so to speak, some of their allocation that they're going to be getting. The reason why this could be a great trading opportunity is that these shorts are not going to stay like this. This is just to secure those profits. So I would make the case that you're going to see a pretty significant amount of this open interest here, which is a lot of shorts, like I said, unwind. And if you happen to have some spot buying around that time, given how many people obviously would be waiting for this unlock, which occurs, by the way, in 7 days. So the end of the month, I think, October 30th or October 31st, you could see a pretty big move here. We'll talk more about that in the stream, but I do want to put this on people's radar. Quite a unique opportunity here. All right, guys, I think that is all we're going to talk about today. And until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and Defiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next Defiancy Insight video. Bye for now.